Welcome to Dr. Fred Markets. This is not financial advice. While most people scroll past the noise, a few take the time to understand what's really going on. Finance, crypto, artificial intelligence, this is where it all connects. You made the right choice being here. Let's dive in.
Your boring index fund just got outpriced by a soda can. S&P 500 futures are up about 0.5% today. Oil's easing, and everyone's staring at Micron and Nvidia like lab rats waiting for a pellet. Meanwhile, the quiet monster in the corner is a literal monster, ticker MNST, that turned every $10,000 in 2003 into over $7 million. Celsius? Up more than 5x since 2020 while you were arguing about Bitcoin versus Ethereum on Reddit. Signal 1. Energy drink companies are compounding like tech, but nobody files them in the tech part of their brain. Monster's long-term annualized return beats Apple, Amazon, Nvidia, and your favorite meme coin. One product line. Sugar, caffeine, marketing. Not AI, not blockchain, not quantum. Cans. Signal 2. Your options market obsession is a sideshow to the real casino. Derivative volumes exploded this decade, yet retail underweights the one thing options traders quietly farm: boring, high-margin cash fountains with predictable addicts. Energy drink companies don't chase the next narrative. They sell tomorrow's 3 p.m. panic fix to the same office zombies every day at a 30 to 40% gross margin. Signal 3. Every bull market innovation has a cheaper synthetic version hiding in the grocery aisle. You want leverage? Energy drinks give you financial leverage on human exhaustion. GDP up? More work. More all-nighters. More caffeine. Recession? People ditch $7 lattes for $2 cans. Same kick. Higher margins. Corporate productivity push from AI? Translation: fewer workers, more pressure, even more caffeine. So here's the cliffhanger. What if the cleanest play on this entire AI crypto overworked circus is not the chip, not the chain, but the can fueling the people crushed between them? Here's the connection nobody wants to say out loud. Energy drinks are a leveraged bet on the failure of work-life balance, and the options market is just how Wall Street skims that bet. Every sunrise sober rave in New York you saw in the news? Cute. Looks healthy, mindful, balanced. Then they go to work, stare at 12 monitors, and hit a Celsius at 2 p.m. because the boss just restructured. Your productivity biohack is someone else's recurring revenue stream. Mechanism time. One new thing for your brain. Energy drinks monetize volatility in your life the way options monetize volatility in prices. Options traders don't care if stocks go up or down as long as they move. Energy drinks don't care if your life improves or implodes as long as you feel tired, stressed, or behind. More chaos equals more caffeine equals more sales.
Does what you just heard make you want to learn more, to dig deeper, to ask better questions? That curiosity is exactly what separates people who understand finance from those who don't. Most people stop at the surface. You're going further. Let's continue.
Now line up today's signals. Markets green on easing oil and AI chip euphoria. Bitcoin and Ethereum down a bit, doing Bitcoin and Ethereum things. Everyone's asking, is this the top? And YOLOing weekly calls on tech. Wrong question. The real question: who consistently wins regardless of direction? Not you with your zero-day options. Not the influencer screaming bull flag every morning. The winners are the businesses that sell consistent relief from the stress markets create. Booze used to own this. Now sober productivity culture splits the throne with caffeine. Sober raves, wellness TikToks, cold plunges, then back to the same 60-hour grind, powered by 200 milligrams of caffeine and a dopamine bomb in a neon can. This is why energy drink stocks act like stealth tech. They scale like software. Once the brand is built, each new can costs cents to make and sells for dollars. They tap into global distribution. Gas stations, supermarkets, vending machines, stadiums. No app updates, no chip shortages. They monetize a universal bug. Humans overpromise their energy, then pay to plug the gap. Here's the brutal verdict. You're trading the options market when you should be owning the people market. You bet on price volatility instead of human volatility. You worship implied volatility and ignore implied exhaustion. Action time. This is not financial advice, but here is the truth. Stop thinking of energy drink stocks as boring consumer staples. Treat them as volatility harvesters on human burnout. 3 concrete moves to chew on. 1. Study the unit economics, not the story. Look at gross margins, marketing spend as a percentage of sales, and distribution reach for names like Monster and Celsius. If the margin profile looks like software and the distribution looks like Coca-Cola, you found a violence-free cash machine. 2. Watch macro stress, not just earnings. Layoffs, productivity pushes, return to office, side hustle culture, all bullish signals for caffeine demand. As AI strips away slack time, human bodies pay the cost. Follow that stress into the income statement. 3. Rethink your option strategy. Instead of gambling on weekly calls, ask, which companies already function like embedded long volatility trades on modern life? Energy drinks are one. Gyms, budget food, cheap entertainment are others. Build a watch list of businesses that profit from the chaos of over-optimized existence. You learned one thing today. Caffeine is an asset class hiding in plain sight. One mechanism. Markets monetize your exhaustion through cans, the way options monetize volatility through contracts. One action. Stop playing the casino. Start researching the house. Subscribe. Come back tomorrow, and we'll keep gutting the polite lies of Wall Street one by one. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.